Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, and this week's contract tip has to do with estimates for your buyer and your seller regarding their real estate transaction. So whenever you are working with the public, whether you're working with a buyer or a seller, as part of your service to them, you really should help them calculate what their bottom line costs are going to be. With a buyer, definitely you are going to want to get the assistance of their loan officer to nail down a lot of the loan related costs and so forth and so on. For a seller, you're going to want to include their payoff costs and other miscellaneous costs like that. But again, it is not totally up to you to determine their actual bottom line, but you should help them determine an estimate so they have some sort of idea as to what it is going to cost them or what they are going to net at the end of the transaction. And one of the things that I really want to bring to your attention in this video are a lot of the hidden costs that our consumers may not think about when they are trying to determine the actual bottom line finances of their transaction. So there are some forms out there for you to help with your clients determine these costs. GAR, the Georgia Association of Realtors, has a couple of forms. One is for a seller. It is called an estimate of net to seller. Imagine that. And that is form F72. And for a buyer, it is called an estimate of cost to the buyer, and that is form F73. The RE forms contract package does not have these forms or any form similar. So definitely check with GAR, look at those forms. Your broker should have some forms available for you. These forms are available in many classes. Many experienced agents in your marketplace, in your office, your mentor, your coach, any of these individuals or places will have or should have an estimate cash to close for the buyer and an estimate net to the seller. And you really should be well versed in how to calculate these costs for the public in order to provide customer service for them, especially with the seller. If you're on a listing appointment, this should definitely be in your arsenal of forms and items that you present to the seller on your listing appointment. So let's cover a little bit about the estimate of net to seller. Also, GAR has a form, GAR has a form, it's F74, called Request for Loan Information. And what this is this is for a seller to sign and give to you so that you can, or for them to send off to their existing mortgage company so that they can get an estimate of their loan payoff. And the biggest cost for a seller is going to be their existing loan payoff. And this form, Request for Loan Information, has the lender's name, lender's address, if it's assumable, origination date, interest rate, escrow balance, so forth and so on. You'll take a look at that form. Now, another thing for the seller's payoff is that your closing attorney, when they get a contract, they will also request from the seller information about their existing loan so that they can also get a payoff. One of the things to consider when your seller is trying to estimate what their existing loan payoff is going to be. When they get a statement every month, or if they have coupons, if they look at what their net balance is, you have to remember that that does not include all the interest that will be due on that loan payoff, because the way that the interest is paid in arrears, basically when they pay it off at closing, they are still going to owe interest to the existing mortgage company from the beginning of the month through that day of closing. So remember to remind your sellers that when they're looking at their their payment coupons, whatever it says as existing balance is typically their balance that they owe is going to be more than that. But in estimate net to seller, again, the majority of what they owe is going to be paying off their existing mortgage. If they have a second mortgage, they're definitely going to have to pay that off. If they have a home equity line, they're going to have to pay that off because their current house that they are selling is the equity, is the collateral basically for that equity line. So that might be a discussion to have with the sellers. And then also you're going to want to find out, or they're going to want to find out if there's a prepayment penalty, so forth and so on. So the payoff is the biggest thing. And then any contributions they're making to the buyer's closing costs. If the buyer is getting an FHA insured loan or a VA insured loan, there are going to be costs assessed to the seller, regardless if they're paying closing costs or not. But there are costs to the seller with a buyer getting one of those insured loans. They may have costs for any repairs, any other thing that gets negotiated. If the appraisal comes in different from the sale price, that might be a cost to them. So there are those costs. Now they will get a refund from their escrow account when they do pay it off. But those are some of the costs that a seller is going to incur. Now for a buyer, again, the buyer's loan officer is going to be a better resource for a buyer's cash to close. But there are some things to remind the buyer that they are going to need. They're going to have a down payment amount. They're going to have other financing costs. They're going to have costs to establish an escrow account. So the prepaids and the escrows and the closing costs. And then there's miscellaneous charges. They're going to have a homeowner's insurance. They're going to have HOA fees. Oh, seller's going to have HOA fees as well. And, you know, there might be some credits depending on what gets prorated, the property taxes and so forth and so on. A couple of other hidden costs that aren't necessarily on these GAR forms or on somebody else's forms that you need to remember to remind your public of, your buyers and your sellers, are, again, the HOA fees. Depending upon which exhibit you are using in your contract, some of those fees are divvied out. Some of those fees may end up being assessed to the seller if they're not disclosed, if you're using the GAR Community Association disclosure exhibit. Some of those fees, depending on when the closing occurs and if the closing is delayed, there might be updated charges in some of the HOA and management company related fees, such as payoff letters, letters in good standing, transfer letters, so forth and so on. So the HOA fees definitely need to continually be updated throughout the process. Some other of the hidden fees, and attorney's fees and title insurance fees are always in there. Again, a buyer, if they are getting a loan, is required to get title insurance that covers the lender, and they absolutely should get title insurance that covers them as well. And again, you can get those quotes from the closing attorney based on the title company that they are writing the insurance policy for. But some of the other hidden fees, again, some of the HOA fees and updated HOA fees and management company fees to take care of that at closing. Those are some hidden fees that you may not be aware of. Some of the other fees, if any of the parties are executing a power of attorney for someone else, not you as the agent, but for someone else to sign on their behalf, there are fees associated with getting a power of attorney drawn up and executed and recorded. Whether that be the closing attorney that draws up that power of attorney or another attorney, again, there are recording fees. There are fees to have that document executed and recorded, wire fees. If one of the parties is having some funds wired, there might be some wire fees that are assessed to them, whether it be if they're wiring, for example, a down payment to a closing attorney, if they're a seller and they're having the closing attorney wire their payoff to their existing mortgage company, there are going to be some wiring fees there. So you need to check with the people that are receiving and sending these wires what those fees are going to be. If a buyer, let's say, bounces, or let's say they write an earnest money check to a broker and the bank does not honor that earnest money check, then they are going to be assessed the whether it's an NSF charge or for whatever reason that the bank does not honor their personal check, there are going to be fees assessed to the buyer for that. If you are having a closing attorney hold the earnest money, which, as you've seen in many previous videos, I am not an advocate for a variety of reasons, please browse the channel and find those other videos. But if you are going to do that, then by all means, make sure you use the GAR form, Agreement for Escrow Agent, to serve as holder of earnest money and have the closing attorney sign that form. And many closing attorneys are charging for that additional service. So that would be a fee assessed to a buyer on top of the earnest money. So again, there are just a lot of fees that you as the agent, in good customer service to your buyers and to your sellers, need to at least address this issue with those parties. And again, there are some great forms out there for you to use, but I just wanted to bring to your attention some of those hidden fees that might not be covered on those forms. If you create your own form, which I suggest you do, make sure you add in those miscellaneous fees, the power of attorney fee, wire fee, additional charges for HOA fees. There might be some additional title work that has to be done if there's a cloud on title. That would be assessed to a seller. If there is a lien on the property and at closing from the seller's proceeds, the closing attorney ends up paying off that lien, there might be some recording fees and court charges for that. That would be assessed to the seller. That would be additional fees, hidden fees as well. So again, I hope that this contract tip helps you think ahead of a few more items, and in order to provide good customer service to your buyers and your sellers. Thank you so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.